This episode was co-produced with Splint Invest, a regulated Swiss financial institution that helps private investors diversify their portfolio by providing easy access to alternative investments, like art, luxury watches, and rare whiskey. With the Splint Invest app, you can start investing with as little as 50 Swiss francs. On May 22nd, we'll be doing a live stream with former Swisspreneur guest Aurelio Peruca about how to make money from alternative investments. Tune in at 12 p.m. CET on May 22nd via LinkedIn, Facebook, or YouTube to watch me and Aurelio get down to the nitty-gritty of alternative investments. You'll find a link in the show notes directing you to the LinkedIn event. Click attend so you don't miss it.
We really want to bring that good feeling and the positive feeling about insurance back into the market, because it's a shame that people perceive insurance so negatively. It's something actually that really helps you. You can do whatever you want, you're protected, you don't have to worry.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Sylvan.
Anina, a very well welcome to the Swisspreneur Show. It's a pleasure to have you here today.
Thank you so much. I'm so glad to be here.
You're the co-founder and CEO at Calingo, a digital insurance company. And you basically have insurance in your blood to a certain degree. You first studied business and economics, and then you went straight to work for Helvetia, one of the biggest and most well-known insurance companies here in Switzerland. So what has been captivating for you about the insurance industry?
Yeah, that's a good question. I get a lot. Actually, it's the huge potential I still see, I see for a long time, and it's still ongoing, to modernize and maybe also revolutionize the insurance market a bit, because it's still the potential for easy digital solutions is so big, modern and like new solutions, new products. I think it's immense. It's big, and customers are waiting for new solutions. Mm-hmm. And I see that potential. It's huge in the insurance market. It's a mass market, so it's a very interesting field. And I find it really interesting to tackle that potential and to bring really modern products to the market.
Within your studies or after your studies, when did you know that you want to go into the insurance market or industry?
That I never did.
It sort of just happened.
Exactly. It was like one step after another. I just started. Mm-hmm. It was my first resume I sent out, and I liked the team very much. I had a great time at Helvetia. I really have to say it was the best beginning for my career. I had every other year I had a new opportunity, like a new step to do. I was in Italy for half a year, also for Helvetia, which was great. So I learned a lot. I really liked it there. And eventually you see the potential, what's there. And I wouldn't miss it.
So you had a great start in the industry with Helvetia. You worked for the company for 7 years, but then you decided to jump ship and start your own company. And I wonder, a corporate like Helvetia, it's stable income. It's probably a pretty safe place to be. What led you to leave that safe harbor and sort of sail into the open waters, in the stormy waters of entrepreneurship?
Yeah, I wonder myself from time to time. I thought in the beginning it was a very hard decision, but in the end, if I look back, it was a really quick decision in the end. I always knew I wanted to build something from scratch and on my own. And then there was the opportunity with my two co-founders. I wouldn't have done it on my own, I have to admit. Yeah. Definitely.
Which is also smart, by the way, I think.
I think so too.
Co-founders.
Absolutely. Really, I really appreciate it. We have a great spirit, and the mindset is still great. If someone is down, the other one take them.
Exactly.
It's a very good spirit, and I find that really helpful and important. So it was like the right timing, because these opportunities, they don't come along every other day or so. It's like maybe once in a lifetime chance. And I definitely wanted to grab that. And it was the right timing. I was young, not too many. I didn't have a mortgage and everything. So it was a good timing. And I always knew I wanted to build something on my own. And with the two co-founders I knew from university and from work, that was a perfect fit. So
Absolutely.
in the end, it was a very quick decision, actually.
It looks bigger from the outside.
Yeah,
then.
exactly. And I really like to learn new things. And even it was a great experience at the big corporates. Yeah. And you learn a lot. It's interesting, and the team spirit is also great. And I met so many great people. But it's nice to see something completely different. And it's very different if you build something on your own. It's a small company. You have to do everything on your own. You can't call legal and ask them, hey, can you set up the contract? You have to do it.
Exactly.
It's hard, but also you learn a lot.
Yeah.
And I think it's nice to see both.
Absolutely.
I even want to see another sector maybe in my career.
Sure.
So.
I think this learning curve that you describe, I think it's always flattening. The longer, the more time you spend into something, the flatter usually the learning curve gets. So then sometimes it's just time for a change.
Absolutely. That's exactly how I felt.
And you also said you always had this need, this desire to start something on your own. Did you have any entrepreneurial role models, like within your family or other people who were entrepreneurs and inspired you to pursue that path?
Yeah, actually, my mom, in a completely different sector, but she built her own company when she was 17, and she's still, working there or owning the company successfully. I think that was definitely a role model, especially as a woman, which is still not that common. And I think it's always, I'm someone who likes to, try new things. But other role models, I don't know, actually. I just always find it very interesting to see new things, stuff that you haven't done before. So.
What's the business of your mom? What does she do?
She's a jewelry maker, and she has her own store, actually.
Cool.
It's something completely different.
Yeah, but still, the entrepreneurial spirit runs in the family, so to speak.
Exactly.
So let's go back to the early days of Calingo when you actually started the company. It was in 2020. You were in total 3 co-founders, you included. So you said before you met them at university and also at your job at Helvetia before. How did you exactly meet, and how did you come up with this brilliant idea of starting a company together?
One of my co-founders, Marlo, I met at university. We studied together. He was a good friend of one of my good colleagues from university. So we ended up learning together, studying together. So I think that's you know how someone works if you learn together for university. Yeah. So that was great. We know each other for over 10 years, I'd say. And then there was Dani. Marlo and Dani, they met at Helvetia as well. Perfect. So they worked together in the startup field, in the innovation sector of Helvetia Insurances. And I met Dani also at work in a different team. We never worked very closely together, but we've met also years ago. And I like them. I think the spirit is very important. And actually, it was Dani who said, I want to do that on my own. Let's quit. Let's do that. And then we started it together. But it was Dani who had, and he has a family. Wow. He quit his well-paid job and everything and said, let's do that. And I was in. But it wasn't, stakes. Yeah, exactly. It wasn't my idea in the end. And I didn't start it on my own at all.
Let's talk about this idea. The 3 of you, as it seems you had some insider know-how about how the insurance industry works, but also where it was falling short and where you saw untapped potential. Tell me a bit more about how the idea was born and what exactly the first initial idea was.
Yeah, absolutely. So we always saw that the potential, as mentioned, for innovative and digital solutions in the insurance field is huge. Yeah. It's not a tackled topic, and there's a lot to do, actually. And what we saw while working at big insurance companies is that maybe the willingness or the ability to really bring modern and revolutionize, or modern products and revolutionize the market in a way is not there, because maybe also they had different or more important priorities, like dealing with the legacy systems, modernizing the IT infrastructure, which I understand. I mean, those insurance companies are huge and grown over years and decades. So we saw that there is a huge potential. from different angles, actually. Like Daniel, he was head innovation at Helvetia Insurance. So he dealt with a lot of different like startups, and he saw a lot of cool ideas. Yeah. But what we saw that it was very important to build it outside of a big corporate. To be successful, we thought it's very important to build it like outside independently.
Why was that so important to you?
I think, or what we believe is you have to have the pressure and be always short on money and always like short on time, and everything has to go fast, and not having like the safe mother company in the background that covers all the bills to really bring fast and innovative solutions to the market. So we decided to do it completely independently, start a new business, and develop new products. And I think that's also something that's very important to us, to not just like digitize the existing products and processes, but really think from outside and see what does the customer need and which products we have to develop to like bring that to the market and to fulfill those customer expectations or needs. And then we decided that the biggest potential is within the product development, to really bring modern products, for example, with monthly cancellation, like a very holistic coverage, so that the customer feels, because the customer doesn't trust the insurance industry, which is a shame actually, because it's something great. And so it comes from the product. That's very important. That's why we develop our own products. And then the sales channels. That's something where we believe easy products, simple products, you don't need an agent anymore for that. You can do that online in the best way. It's integrated into the point of need. Yeah. And that's the B2B2C approach where we saw a lot of potential for, and we tackled these sales channels in the beginning.
I love that. So you basically identified, hey, there are products that should be out there, but they are not out there to have more customer value. And at the same time, the way that you distribute or sell these products, you also saw a gap there that you could fill. And at the same time, you said this will not be possible within the big corporate ship for multiple reasons. It's just probably the price you pay as a big corporate, right? You lose some speed, but you could fill that gap. And that's why I decided to start your own.
Exactly. Perfect.
Did you actually try at the beginning, before you decided to start it on your own, did you even try to execute that within the big corporate?
Mm-hmm. Definitely. Yeah. There was several approaches, especially in the innovation department of those big insurance companies. They tried, but they tried to integrate it into the core systems or the core business model of the big insurance companies, but never like really touch the core. So they never change the big way how everything is done, like with the agents, how we did it for years. They didn't want to touch that. Yeah. So it was always just on the outside of the core business. And we thought that's a shame actually, because as mentioned, the potential is huge. Yeah. Customer, they expect more digital, more easier solutions. And we saw that's not going to happen in the big insurance companies.
That must have been also a bit frustrating for you as a team, right?
Yeah, absolutely. In the beginning, it was, which is also why I think we decided to do it on our own. It's also helpful that you see that the big companies are not doing it on their own. Of course,
yeah. So you really see the gap, right? That
exactly.
You feel as a startup, basically.
Exactly. And I wouldn't say that it doesn't need the big corporates, not at all. I think there is a market for, markets for both. Mm-hmm. But it's just there is one market that hasn't been tackled so far, or not really. So big potential.
I feel there we could do a whole episode about corporate innovation and what's good, what's not good. But basically the legacy systems and also the risk, because these corporations are so big, the risk of actually losing something basically, hinders you to do some innovation that the customer might need or creates more customer value.
Exactly.
So let's continue about what you actually do with Calingo. You decided to be fully digital. Why was that important to you and the right setup for you?
Mm-hmm. So what we believe, or what we see, is the biggest issue with insurance is that people, they don't want to spend time with insurance at all. Yep. It's something they value as very important, but also very like boring. They don't want to deal with it. It's something very annoying in the end. Yeah. So we try to do it as easy as possible. Simple products, simple ways to buy. And then you have to be digital to do that. Yeah. For like basic products, like object insurance, household insurance, even pet insurance we're offering. And those products, you don't need like a huge amount of advisory and you don't even need some personal contact to close that because they're simple products. It's 3 packages you can select. It's very straightforward. These products, they work online. You don't need a vet signature, for example. You don't need paperwork to close an insurance company. It can be real time. You don't have to wait for another week or so. Yeah. So it's for the sake of be easy. Mm-hmm. We are digital. But for like complicated or complex products, I don't know whether that works. It's not, we don't do digital to do digital. We do it to be easy and convenient for the end customer. Right. And for us, that works because it's easy, it's real time, it's fast. You don't need anything. You can do it online. You can do it in the evening after work. So for us, that's very important to just be as easy as possible for the end customer.
And to deliver this ease of use, you also chose insurances that are actually easy to understand and easy to execute. Mm-hmm. Was that the key decision factor that sort of, shaped your current offering, or what were the other thoughts behind your current offering?
Absolutely. So we definitely have the focus and always had on non-life insurance, object insurance, easy insurance products. As mentioned, not life insurance, not corporate insurance, where there's a bit more of complexity behind. So the easy products that you can buy online for private customers. That was always the approach or the target.
Got it. And I like the personal finance aspect. And there you usually say high risk, high reward. If I try to translate that into the insurance world, I could come up and say high complexity, high margin. So is that also you leave some money on the table by focusing on these easier to use and to build and to execute insurances?
Yeah, that's one hypothesis, definitely. But for us, I'm not sure whether it has that much of an impact. Yeah. I believe the bigger impact on the premium or on the margin is whether you have high sales commissions or not. Yeah. And since we're digital, we're online, we have the big advantage of not having that high or these high sales commissions, mm-hmm. which makes our product very affordable.
How big are these sales commissions usually? Probably a range, of... You have an agent and then you have to pay them for every insurance customer that they bring you, right?
Exactly. They're high.
It's 30 to 50% or even more?
I know, not more, but okay. I would say,
range. Yeah. That's definitely crazy.
That's crazy. Right? And it's not fair to the end customer, I would say. Yeah. I think like 5 to 10%, that's enough.
Of course.
Yeah. So we really try to bring a modern product, which is fair in terms of pricing. But also on coverages, as you mentioned, not being that complex, just cover everything. Mm-hmm. It's not that complicated. Just make it holistic. Yeah. The customer feels protected. Everything is in there. So you don't have those events where you thought you're insured, but then you're not, and you thought you're covered, and then you don't trust the insurance anymore. So we really try to get rid of that and just cover everything. If it's possible, of course. I mean, there is always some restrictions from the regulatory side, or to not make the tariff too expensive. Like there's always some smaller parts that cannot be insured. But in the end, we really try to have a holistic product, the easy one, or that you can choose between small, medium, large, and then you know exactly what's covered and what's not covered. Yeah.
So that's also your strategy to win the trust of the consumer, mm-hmm. of the customer back, to make it easy to cover as much as possible and to sort of be a nice insurance, so to speak.
Yes, exactly. No, we really want to bring that good feeling and the positive feeling about insurance back into the market, because it's a shame that people perceive insurance so negatively. Yeah. It's something actually that really helps you. It helps you. You can do whatever you want. You're protected. You don't have to worry, which is something nice. It's a nice feeling, but we need to bring the trust back so that you really feel protected. Yeah. And I think you can do that when you have a really transparent and an easy product, a good customer service. I think that's very important. Even though we're fully digital, you can call us like all day long, every day, a week, and there is someone picking up the phone, explaining everything to you. And I think that's very important, to be there where the customer wants you to be.
When they need you, right?
Exactly.
That's the most important.
Exactly.
Yeah. Another big topic of insurance that we all have to deal with every year here in Switzerland is health insurance. Is that something that you also looked into to offer with Calingo?
Yeah, definitely. I still think it's a very interesting field, but it's a very saturated market. Yeah. And we always look for mass markets that are, in the best way, not saturated, or where there is a great potential for integrating the product into the point of need. So the B2B2C approach, where you have different sales channels where it makes sense to add the insurance product to the primary product, like e-commerce. You buy something online, you attach it in the checkout process, you can add the insurance for your new bike or whatever. Yeah. And there is not that much potential for the health insurance part, and it's very saturated market. So, and highly regulated, even higher than like object or non-life insurance. So not for the moment. I mean, we do health insurance, but for pets. But it's from the regulatory perspective, it's an object.
I got it. Yeah. So there, the regulations and the market saturation are basically, for now, keeping you out of that market.
Yeah, exactly. Exactly.
You mentioned this B2B2C approach. You do actually serve both, right? You sell through B2B, but also B2C directly. Please tell us a bit more about how you actually win customers today.
Yeah, we have both. We really do. Half of our sales comes from B2C, like that's online. We do SEA, so Google ads. We do Meta ads, Instagram, Facebook. We do Reddit, Pinterest ads, which works very, very well. Because there is, for the pet product only, I have to say, because the market is very unsaturated. Its insurance rate is under 10% in Switzerland, which is weird because Swiss people have insurance for everything.
Exactly, yeah.
But most pet owners, they don't even know that there is a health insurance for dogs and cats. Yep. So we have to get a bigger audience, bigger target group, and present our product, which is going great. We have very low acquisition costs on those B2C online channels, which is great. And what's great there, you have short time to market and short sales cycles. You push the ad online, and the next day you have your revenue. So that's that. And then we have B2B2C, which we also believe is very important also for the like midterm or for the future to scale and to be able to grow on a monthly basis. So that's why the sales cycles are longer, but that's why we also build up to diversify those sales channels with veterinarians, with vet clinics, breeders, health insurance companies. They're selling our pet health insurance to their customers, because the pet nowadays is a part of the family, right? It's a family member, and you want to protect it as you do yourself or your children. So it definitely makes sense to add that to the primary health insurance for the family. So for us, it's a very good way to diversify our sales channels and have short-term revenue, but also build up a sustainable business model with a network of B2B2C sales channels where we can sell our products. In the end customer is always insured with Calingo. We have the connection to the end customer. So from the operational side, actually it doesn't matter for us. It's really diversification for the sales channels.
This episode was brought to you by Google Cloud, a partner that needs no introduction. What you might not have heard of, though, is that Google offers a Google for Startups cloud program where they give you access to startup experts, technical training, business support, and cover your Google Cloud costs up to $200,000 for 2 years, or even $350,000 if you're an AI startup. Scale your startup faster and smarter with Google Cloud. Head over to goo.gle/Swisspreneur. But I imagine as a startup, that's quite a difficult task, right? Because the skill set you need to acquire B2B multipliers, so to speak, to then get to your customers, or doing performance marketing online yourself, that's like a completely different skill set.
Yeah, we thought so too, but actually the biggest challenge is to explain to everyone what we're doing. What is your business model? Is it B2C? Is it B2B2C? For us, for the operations, for all the processes and the know-how, it's not that difficult actually. It's both is actually, I mean, to onboard new sales partners, that's a challenge. You have to tell them how cool you are, that they need to sell your product. And also for the sales partners, it's insurance. No one is interested in that. But with the pet product, for example, it's really nice. Like in pet doctors, they have their interest on their own to have well-insured pet owners, because then they can do all the diagnosis, all the treatments, the therapies. So that's also very helpful on that side. But yeah, you need different skill sets. But for the B2C, like performance marketing, it's not that complicated nowadays.
Yeah,
I mean,
right.
The algorithm does everything for you, basically.
Yeah.
So for us, it's actually not that complicated, and it's very efficient to do both. Mm-hmm. But what sometimes I have some issues explaining what we're really doing. Are you a B2C or a B2B2C company? But I think it's very valuable for the company that we have those two approaches. To have a short-term and long-term sustainable business model.
When we talk about these B2B partnerships that you set up, compared to traditional insurance, which probably pays a higher commission than you, is that sometimes a challenge? You know, that they say, oh, I can work with Calingo. I have a fantastic product, which is probably, very attractive in terms of pricing for the customer. But me as a partner, I get less commission if I sell your product.
The good thing is that the big insurance companies, they're not doing that much on B2B2C sales. Okay. So it's basically us, and there's some other embedded insurance startups. But actually with our products, we do not have that much competition. So most of our sales partners, they don't even know, or they didn't have the idea so far to sell insurance. Okay. So they don't have anything to compare. And also when we explain them, we don't want to have very high premiums for the end customer because it's not fair. They really understand that. And I think also especially like pet doctors, and so they're not that interested in the commission. They just want to have a fair product and well-insured customers. Got
it. Makes sense, I think. And how do you actually compare in terms of the pricing in the market? Are you significantly cheaper, or even the price leader in the market?
Yeah, we are on the home insurance side. We're about, I would say, 25% cheaper than market average. Nice. Because really easy operations, not that high sales commissions as mentioned. On the pet side, it's a bit different. We are in the beginning a bit higher, slightly higher than market average, but with constant premium over the lifetime of the pet. So our premiums, they remain constant and doesn't increase with the increasing age of the pet, which others do.
As we know it from health insurance for people.
Exactly. And that's actually, I think pet owners find that really annoying. They buy something, it's very cheap in the beginning, and then they didn't know, and then suddenly every other or every year the insurance premium increases. That's a bit annoying. For us, it stays constant. It remains on the price you pay at the beginning. And over time, over the lifetime of the pet, our product has more coverage and is slightly cheaper actually than market average. Yeah. So nice. I think we always have to explain that, because in the beginning we're slightly more expensive, but I think it makes sense because it's much better to really cover everything like a health insurance does, and not just parts of it, and the customer doesn't understand it anyhow. So for us, it's good to have a very holistic offering, and actually people love it. It's not that they complain about the price, because they know that veterinarian bills are very high, and they're willing to cover and protect their pet.
And it also makes sense to follow your claim of being the friendly and easy to understand insurance. That seems to make great sense.
Absolutely. I think it's very important, to also gain the trust of the customers.
And who is your typical customer, typical insurance customer?
Yeah, everyone assumes that it's just young people, but actually that's not the case. It's very diverse in terms of age. What's very interesting is for the pet products, we have a lot of women because I think they care, or they take care of the health insurance for the whole family, or for the pet maybe also. So we have a lot of women. And besides that, for the other products, it's like very diverse. We have all ages. Just people who like to be online and buy everything online and have an easy insurance and like to be covered.
Makes a lot of sense.
So actually our target group is like all Swiss people.
Sure, yeah.
Yeah.
And I also want to talk about the setup behind the scenes. So as a customer, I of course see your website, and I can directly sign up and purchase insurance there. But how does the setup in the back actually look? Do you carry the risk of the insurance yourself? Do you partner up with other companies there? How do you solve that?
Yes, exactly. To be fast and to have a short time to market, we collaborate with existing insurance companies as a risk carrier.
Yeah.
So they provide the balance sheet and the approval, or like the approval from the regulatory authorities, FMA or FINMA, and they just provide the balance sheet. We transfer the premium directly to their balance sheet and they pay the premium, which is also very important to make sure and to give the trust to the end customer that all claims are always paid. We have insurance and we have a reinsurance. SwissRe is our reinsurance. So the whole portfolio is always covered. It doesn't matter what happens with Calingo. The premiums are, the claims are always covered. Yeah. So that's for us a perfect way to be very secure, but also fast time to market. But as mentioned, what's also very important to us to that we can develop the products on our own. Of course, always in collaboration with the risk carrier. In the end, they have to insure it, the portfolio. They have to approve the tariff and everything. But we want to have a product with a huge product market fit, which is why we talk to customers. We interview partners so that they can tell us our customers needs this and that, and then we can develop accordingly to the needs of the sales partners and their customers. So we can have a product that really fits the needs. And I think that's very important that we can develop the product. And of course, do sales, service, claims, that's all with us.
Sure. It reminds me a bit of the neobank setup, right? You
exactly.
have the bank in the background,
Absolutely.
But a front end and sales machine in the front that you take care of.
Absolutely. It's very comparable to that.
How does that then work? You come up with a new product, and then I guess with the insurance company that then carries the risk, you have negotiations to make sure that you get a good price and that actually also makes sense from a business perspective. How long does that take and how does that work?
Yeah, absolutely. That takes some time, but so far we have very good collaboration with we have different carriers in the background, always with SwissRe as a reinsurance. Yeah. So far, they're very open to our suggestions. Of course, we always base our tariff on historic data. So it's not coming out of nowhere. I think, you can compare the product to the market, and there's a good way to like evaluate whether the portfolio and the product and the tariff make sense or not. So for us, we never had that much of a problem with negotiating about the product, about the tariff. Of course, the commission, that's something you always discuss, but also they also want us to succeed. They know we have a lot of operational sales tasks to do, which takes time, which needs money. So that's fine. What we did for the first time with the new product, with the pet insurance, that's a profit share kind of collaboration.
Makes sense. It puts you in the same boat.
Exactly. So you have very aligned interests with the carrier, and actually I like that model a lot. That makes definitely sense. And so far not that many discussion on that side, which is nice.
Yeah. But I feel that's one of the hardest part. It can be in your own startup, to think about how do you want to incentivize your key employees, etc. But here, exactly the same. You have partners that you depend on. You have to think very hard about how to set the incentives right.
Absolutely.
That's key.
Yeah, absolutely.
So I also want to talk about your funding, basically. You have raised in total 3 million Swiss francs in 2 CLAs and 1 equity round. First of all, how did you decide to go for a convertible loan versus an equity round?
Yeah. Whenever we want to postpone the discussion about the valuation, we do a convertible loan. If we're sure that the valuation will be good, according to the traction, then we do an equity round. That was basically, in the first round was a CLA, just to make it easy and not talk about valuation when you don't have any traction. That doesn't really make sense. So it's really handy to do just the CLA. And then, of course, the next round should be an equity round, which makes sense, which was our seed round last year, where we raised another 1.5 million. And then this year we did a smaller CLA again. So just to have enough runway until we're ready for the Series A round, which is upcoming next year.
Amazing. You're really on this traditional startup trajectory to, seed, Series A, etc.
Yeah, so far, you're right.
How do you win the investors over? How did you convince them that an investment in your company is a good investment?
Yeah, that's actually funny. In the beginning, we worked a lot with business angels, and many of them coming from the insurance industry. It was much easier to convince them because they saw the huge potential. You know, they know the industry, they know that to just be digital, that's already a big revolution. While with other VCs, deep tech focused VCs, it's like, you just digitize an insurance product. What's the innovation here? Yeah. But for the insurance close in like VCs or business angels, that was actually an easy convince. And then for the seed round, we started talking to VCs. VCs, they like fintech and insurtech because it's something it's a mass market. It's a lot of money in there. And there's a lot of potential to revolutionize. Yeah. So in the end, I think they like the business model, B2B2C especially. And what I think is also what helps us a lot convincing the investors is our team, because we have a lot of knowledge in the insurance industry. We're not coming out of university and directly start something without experience. We have a huge network. We know insurance. We know a little bit of the innovation and technology side. And I think that's what VCs and investors like.
That helps a lot, I'm sure. What were some of the KPIs or the traction that the VCs were looking at the seed stage?
At the seed stage, I think it was that you have traction at all.
Sure, just some revenue and some customers, basically.
Exactly. And that you grow on a monthly basis. I think that was very important. But I think more than traction, it was important that you have a business case and a growth potential that is big or huge, more on like the future sides where they were looking at.
The growth, like month over month growth, that's what they usually look at. How was that for you? You don't need to reveal any business secrets, but did you grow double digit month over month, or how was the growth looking at that point?
Yeah, actually we're in this for 2023, this year we are growing on a very nice basis, so that's going well. When you're small and basically have no traction, and then it's very easy, of course, to grow on a double-digit basis over a monthly or month to month. Of course, that flattens now a little bit, but we're growing at the moment. I would say 25% month over month around, which is very good. So that's what they like to see. But it's very difficult, of course. I mean, it's always difficult to reach what you have done or what you have sold last month. And then you have to top that and increase. But so far it's going great. Also because we have the strategy of B2C and B2B2C. It takes a bit longer to convince and cooperate and set up the collaborations with those B2B partners. But once they're onboarded, they start to sell. It takes a little bit longer, but then of course you can make sure that you grow over time. You
reap the benefits a bit later.
Yeah, exactly.
And now, since you also have investors on board, of course, at one point, they probably want to see a return, right? So what is your plan with Calingo? Do you plan to sell the company maybe to, one of the big corporate tanks one day, or you even plan to do an IPO, or what's your plan with Calingo?
Yeah, I get that question a lot, of course, makes sense. For us, the priority number one is to set up a sustainable business model with happy customers. It sounds a bit stupid, but that's really what we focused on since we started the company. Yeah. I think it's not good to just start a company and wanting to have a short, like a fast exit after 2 years. I think that's not the best approach. But of course, a merger with one of the health insurance or insurance companies in Switzerland, Germany, wherever, that's one option, definitely. Yeah. For us, what's really still our main focus is to build up a sustainable and hopefully soon profitable portfolio and business model. So nice. That's most important to us. And to keep the good reviews and Google and the happy customers.
But I agree, that's the most important. Often we forget about that, Everyone wants to exit, of course, but there's no exit basically without happy customers and a good business in the background.
Exactly, definitely. Yeah.
So what are your milestones for the next few months or even next 1 or 2 years? You mentioned the Series A coming up next year in 2024. What else have you planned?
Yeah, exactly. For me, very important to close a successful Series A round next year, but I'm convinced that we're going to do that. And then we have a lot on our table. We believe that there is a lot of potential for additional services around the health topic for pets. For example, vet video calls. Apparently, you can 70 to 80% of all vet visits, which are very stressful for the dogs and the cats. They don't like to go to the doctors. You can do that online, what we have seen from studies in Germany. And we want to set that up for our customers, that you can, whenever you have something or you feel like the dog is not well, you book a meeting online in the evening, in the morning, wherever you have time, and then you don't have to go to the vet. So that's something we want to add to our service around the pet insurance, to really be a pet health provider in Switzerland for the end customer, for the pet owners, because we believe that there's a lot of additional services that would be helpful, and it's a very unsaturated market. And a very interesting market, and we would like to develop those additional services around the topic of pet health. And then maybe the year after, so within the next 2 years, I would say, also the step to Germany, to international scale our pet insurance, that would be on the agenda.
Nice.
Yeah.
I like that. Very ambitious plans.
Yes.
And growing. I like that.
Exactly. I mean, Germany, it's like a 10 times bigger market than Switzerland, also not saturated in terms of pet health. So we believe that our product can be sold in Germany as well.
The logical next step.
Exactly.
So Anina, to wrap up the conversation today, I also have some rapid fire questions for you. I either give you a choice to choose from, or you have a short question to answer in one sentence.
Cool.
You ready?
Yes.
Quickly tell us about a time in your life when having insurance came in handy.
Oh, yeah. When our bike was stolen just recently, when there was a burglary at our cellar. So it's very important to have insurance that covers the new value, actually, of your item. So that's very important. You can buy a new one because they get more expensive, as we know.
Exactly. What's the best thing about being an entrepreneur?
I find it really nice to do everything on your own, from strategy to operations. Yeah. I find that very cool, that you have the whole, and also to see the whole, how you create value. We have the idea, you create a strategy, and then you do it, you bring it to the market, to just see everything from bottom to top, or the other way around. Mm-hmm. I think that's something I really like. Nice.
And what's the worst thing about being an entrepreneur?
My phone and my laptop glued to my hands.
I see.
No, I mean, just waking up in the middle of the night worrying about whatever challenge you're facing. I mean, you're always working and it's always on your mind, even though you try to relax or go on vacation. Of course, you can't stop working, and it doesn't make sense to stop, actually, because it's always on your mind anyhow.
Sure.
So yeah, but I think it's also nice to be just all in for one topic. I really like that, actually, and not be distracted. And yeah, I mean, that comes with vacation where you're working, but that's fine.
It's a deal you're willing to take.
Exactly.
Have you ever regretted to leave the safe harbor of the corporate world?
No, actually, I did never. I miss my old colleagues and the old teams and everything. I really like to have nice exchange with all those different people in the big corporate. But to leave the big corporate, I've never regretted so far.
And the last one for you: how have you changed personally since you started Calingo?
Yeah, that's a good question. I think you get a bit more relaxed in terms of or more convinced that you will find a way to overcome obstacles, and because there is so many challenges all the time. Everyone knows that as an entrepreneur. And we really saw that as a team, we can tackle all those topics and overcome those obstacles if we work together, and that there is always a solution. Even though in the beginning, you think we never do it, we're not going to make it. there will be some kind of way where you have a workaround or you still make it, or there's another way to go. Just to be very optimistic and a bit relaxed on what can go wrong and focus on what can go right. I think that's what I have learned over the last years.
Absolutely. And it's also cool if you then look back and then you see, I mean, as an entrepreneur, you're always, focused to look forward, what's next milestone, but then you actually look back and see, oh my God, we came such a long way.
Yeah, absolutely. That's really true. And we have to do that more often, I think, and also to celebrate what we have done so far and be happy. And then after a year, you think, why did we worry? Have we worried about that problem we faced a year ago or whenever? And now it seems like so small, but it's always in retrospective, it's easier.
Exactly.
Yeah.
Anina, that's a wrap. Thank you so much for coming on the show. Lots of success and all the best with Calingo and whatever you're tackling and building next.
Thank you so much for having me. It was a great pleasure.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.